This week, what guys, we're doing housing. I did not see, and Roy, I'm not going to stress you, my friend. I know you're busy. I did not get an update. I know you gave it to me before the class on Saturday, but I didn't get an updated version of what I kind of expected for you guys. So we're going to go on fly doing the housing. I'll just create it, using my template again. But hopefully, the next time this stuff comes around, everybody will have their prompts ready for me. So no problem. We're still working with what we have. So let's go to I think I'm going to use Google Gemini. We're going to do a new one. Let's bring in the 20 years of experience. We're analyzing housing. And then what's the first one this week? I know we have housing starts tomorrow. No, actually, there's nothing on Monday. Housing starts is on Wednesdays, but we had another one. Yeah, yeah, the housing market index. Can I copy that? I can do it. Um, the National Housing uh, Housing Index. Right, that is scheduled for November 18th. I'll put the date on it. 11/18/25. No, that wasn't it. Hold on. Oh, no, what was the bracket for that? Oh, okay. That should be here. Okay, my bad. Give me a second. There's a date, and then let's put this. I feel like I'm being redundant on this. I made a mistake here. I don't know what I did. Primarily on analyze. I'll put the housing market here just to kind of differentiate. But I missed something. Focus primarily on this analysis targeting the housing index on 25. I need a complete analysis of the entire. So now let's go get the acronym. Housing. Man, I cannot wait until I have all of these things from you guys so I don't have to do this anymore. That is my ultimate goal. All right, so reside, copy that out. And then we put reside here. Reside acronym, enter. Then there's the acronym there. And then we're going to let this run. Now we're good today because it's not until tomorrow, so we get a chance to analyze today. And then once again, guys, let me reiterate what we're doing. Today is a hack week. If anybody doesn't remember what that is, the hack week, there's two of them. You have a hack week for the interest rates. No, I'm sorry. You have a hack week for the labor market, and you have a hack week for the housing. What that means is that there are going to be several economic events in the same week. 3 days in a row, 4 days in a row. I've never really seen 5 days in a row, but I've seen 3 days and 4 days. So I think this week there's a 3 day, Tuesday, Wednesday, and Thursday. There are three housing event or announcements. So the premise of the strategy of the hack week is to let the first announcement come out, whether it's on Monday or Tuesday. You want to find out what the economic metric is. You want to find out what the sentiment is. You want to find out what the expectation is, and you want to watch how the market plays it all out. Look for the range. Look for the traps. Look for the momentum. find, take every detail on that first trade on Monday or Tuesday. Then you can now use all of that data to be able to predict how well the rest of the trades for the week will go. So as we now analyze the index, the housing index for tomorrow, we're going to let that play out. Then we're going to be able to trade the housing starts on Wednesday, and I think another housing announcement on Thursday. Let's go to our calendar to see which ones they are. That's weird. I thought I put in some dual trades, but no problem. Oh, here they are. So we have the HMI, the existing home sales. So yeah, the HMI is tomorrow. This is the one we're going to use as our anchor. And then we have the housing starts on Wednesday and then existing home sales on Thursday. So hopefully we can use now. Here's the thing is that it's really, you know, the government coming back online, so I don't really know how these are going to play out. That's the reason why we're going to take today and tomorrow morning to analyze, using AI to analyze how the housing market is looking. But based on the economic events that we've gone over the last couple of weeks because of the government shutdown over 30 days, I don't really know how this is going to play out, but let's hopefully that it may be an opportunity. It may give us a high probability. We'll see what we can do. But we do know that even if, we can't make money on the Tuesday or Wednesday, hopefully one of these will give us some of a decent trade. And we know how it looks. The trade opens, gives us our momentum. We get our 8 points, our 10 points, or 20 points based on the momentum, make our money, and then we move on. Hopefully one of the trades this week will give us that. All right. I made a boo-boo. Remember I said do not click off? So let me go ahead and stop this. Let's try to run it again. When it comes to Gemini, do not click away from the browser. It'll hang. And I might have to put it, I'm gonna, let's do that. Let me refresh. Let's give the AI a refresh. Let's go ahead and put that in again. Ah, man, I should have kept. Crap. I lost my prompt. No problem. Let's put it back in. Should have copied the whole thing. All right, 20 years. That's what I'm supposed to do. I'm supposed to put in all of the different housing. That's the thing. There's supposed to be like a list here. So we'll put in the um dang it, I forgot the acronym. Housing index, existing home sales, and housing starts. And I know there's more, but that'll at least let the AI know what we're doing. And then here we'll put in resides. And there's one more. This is for 11. $18. And then this is where we put in the housing index. Let me copy that whole thing. Let's run this again. If it doesn't kick in, I'll use another AI. I don't know why it's doing this. I don't really use Claude. Let's use ChatGPT. We'll run both of them. Because this seems to be hanging. I don't know why. So I'll just stop that one. ChatGPT is not working today. All right, let's see what we got. Now, has anybody heard of the 50-year mortgage? I know Roy has. Is there anybody else that has watched these news reports of introducing a new product called the 50-year mortgage?
Oh yeah, I saw that.
I remember
Slavery.
the 40. I never remember the 50.
50 just got introduced about a month ago.
Mm-hmm.
They're like, if people are not buying these houses, let's give them a remember I said, remember when I described you guys the monetary system that people when these bonds are created, no one is looking at the term. There's nobody that's going to keep a house for 15, 30 years. You're going to refi it or you're going to sell it. Like 1% of people keep it for the term. So that's why they're not really worried about the 50-year. Because I watched the videos that described it, and basically a $400,000 house. Pay attention, a $400,000 house with a 50-year mortgage. You're going to pay over $2 million in interest
Woo!
over the course of the 50 years. And we know, those of you that do know the industry, when you start making your payments, your mortgage payments, you're paying the interest
Easy
first.
in front. Yep. Mm-hmm.
So all of those payments you're making for the first 25 years, 30 years is going towards $2 million to the bank. And you haven't even begun to touch your principal.
I wonder if they even have that part where you can pay the principal. They probably bleeded that out.
Yeah, but that's always a default. All you gotta do is make two payments. We know that little strategy where you can put, some of it towards the mortgage and then make another back payment. But you have to specify to the
Yep,
mortgage company that it goes towards your principal.
right.
So that strategy is probably still in place. But think about it. Now you're gonna make double payments. Now because they
Yeah,
also say your payment's gonna be somewhere around $2,000. It's going to be in the
terrible.
$2,000 range. So if you're all trying to pay it toward the principal, you got to pay close to 4,000 or more over 50 years. Um, and then
Right.
they came out with another product because nobody was biting on the 50-year mortgage. So they came out with a floating mortgage. Is that what it was called? No, a portable mortgage.
Yeah, yeah, they're trying to implement what the UK does, what Britain does is they because they don't have a 30 year, they have a floating that adjusts every Friday, every week. So they're
What?
trying to yeah, they're trying to
Huh?
these conversations that are air quotes moving the housing market. Remember
Yeah.
who's in office. You don't you
Oh
you
yeah.
you got this
Oh
is
yeah.
clown face time. This is clown face time, really. Because these are type we just came from '08. I mean, I'm a Lehman Brothers. Me and my colleagues are just sitting back like, all right, we're gonna go back in retail, rip the market up once Fannie Mae
Yep.
does it. We're
Another
gonna
bailout.
relive it, and I'm moving to Mexico or South America, taking my money. I'm gone. I have no problem them
I'm not doing it again.
rewinding the clock. But yeah, they're trying to float that around because coach, you hit it on the nail. They want people to eventually want get this. Everybody's going to go out there. They're going to buy big. They're going to
Yep.
go to the extreme. Something's going to happen. Tax is going to happen like now. They're going to start buying less.
It's
They're
a
going to
trap.
want to refinance that. So that refinance loan, regardless, is going to be like a student loan. They
Yep.
can
Yep.
even go, say they go foreclosed. That mortgage is going to stay with them like a student loan.
Yes,
They're going to
sir.
have to refinance it
Yes,
over and
sir.
over. So they're going to
Yep.
get like two transactions
Reverse
in one.
mortgage. Yep. Think about all the mortgage products that are used to bail somebody out of a mortgage. So they're going to be reverse mortgages and refinances and all these different things. So it's really another bubble because you have loans on the original 50-year loan, all based on the same property, based on the same debt.
Usury.
You got it. You got it. It's a trap. They want people to bait on that, and it's almost predatory. It's almost predatory because you may get some.
It is.
It is, but even the reverse mortgage was predatory because they targeted older people. It's all predatory because
Reverse
they
mortgage.
know
The
that
whole concept of a mortgage where they're getting paid more than the value of the item resource is predatory. I don't get
predatory in nature. You're right.
Straight up, yeah.
Right.
But
He's right. No, he's right because it's already speculative. Now you're going to add more predatory to it because your property. I mean, they're literally these builders are literally building property. As soon as you buy it, they build another one next to you about 50 to 1,000 plus less on purpose because they can't move units. So they know they're getting screwed. So they go right around and screw you and the future resident living next to you.
Yeah. What about securitization, where they take your mortgage and go trade it and make 5 times the value on it, and you still got to pay that mortgage?
You can see the bubble.
That's,
You can see the elements of the bubble being created before it ever got started.
Yep.
Yeah, that's the serviceable value that they use. But get this, with all this crypto and whatnot, and when the market had crashed, I bet they wish they had only a $750 billion toxic mortgage-backed security to worry about.
Hold on. You just mentioned the third product. Remember I said they came out with new products. Let me pull the second one. The second was the what did I say? It was a portable. And this is a perfect time to go over this, guys, because we're going through the housing market. All of this is going to factor in. So we'll talk about the portable market, but there was a third product that was offered where you can buy your house with crypto.
Oh.
Yeah, I saw that report.
Crypto-backed mortgage.
They're going after investors too.
Yep. All three of these came out back to back. They tried the 50-year. People didn't really bite. They introduced the portable. And then I heard about this. I think somebody put a video in the WhatsApp. That's how I caught on to it. But yep, crypto-backed. And they were doing an interview and the person was like, well, what if, because crypto is going to crash. Crypto can crash at any minute. So how can you use your crypto? And then here's the other thing that they said was crypto is going to be worth more than the house originally. Like right now, if somebody, 1 crypto, 2 crypto, 5 crypto, how much you're using, the crypto can be worth, $3 or $4 million, to buy a $500,000 house. But what do you think is going to happen? It's predatory. What do you think is going to happen when the crypto markets crash? Whether it crashes this year, next year, or when the hashing, whatever they call it, when that runs out.
Then you go old Donald Trump because he's going to be the king of crypto.
Thank you.
Nah, you got to go after these banks because remember, these banks are the ones that wrote the regulations. Remember?
Got it.
When the big what do you call it? The reset or the mortgage meltdown when Hank Paulson came in there and brought all those bankers together. Those are the ones that it's like getting Al Capone and the rest of these guys to write regulation laws. That's literally what we're doing.
The perfect analogy.
We literally put these guys.
Yeah, I'll make you an offer you can't refuse.
Wells Fargo, Chase, these guys are the ones that created it.
Yep.
So they're just it's like a dope thing. I got to work hard to make more money to buy more alcohol.
Yes, and they're gonna work harder to do.
I got to work more harder, and you go round and round and round, and that's exactly what they're doing. And they're talking it up. I put that video in there, Coach. Yeah.
The craziest part. Here's the craziest part as we kind of now focus on the crypto heads, because they will look at this crypto-backed mortgages. Oh, we finally have a utility, and they think that this is a validation for crypto, not realizing it's another predatory scam.
They're already talking about transactions on the blockchain. So you got to realize we got a guy who's a builder, Pulte, who has a failing business right now. Every builder in the U.S. is suffering. So this guy is looking out for their best interest. Mm-hmm. Then you've got a crooked realtor in the Oval Office. So you've got, I mean, these guys make the bankers look like child's play. Really, these guys here are they. It's going to be amazing. Even we actually calculated and did one. I mean, you could do it on any mortgage calculator for free, and everybody's mortgage that they're going to bite down on this 50-year, which more than likely is going to be some form of crypto in it, is going to be paying an average of $200 more. So they're already doing echoes and talking it up, saying crypto is more valuable than mortgages. They're already doing that.
No. And if you say it long enough, and you say it and you repeat it long enough, everybody will start believing it.
A lie go around the planet faster before the truth wakes up.
Yep.
Propaganda.
But let's lock it in on where it is now. Like, we're looking at all the prediction of speculation of what it's going to turn into, which we're probably right on all of it. But right now, introducing these new housing or mortgage products is initially, and that's what a bubble does, right? It's initially going to infuse and generate and start getting the housing market started. This stuff won't come back to haunt people for another 5, 8, 10 years, or any kind of Fibonacci number, 5, 8, 13. But it is going to come back and to haunt people in the future. We just don't know when. But for now, looking at this week in the housing market, these things may create some level of sentiment and expectation when it comes to the housing announcements this week. So what we're going to do is we're going to take these 3 products, we're going to put it in AI and tell it to give us an idea that if, the introduction of these 3 products, is this going to factor into the metrics or the sentiment? Is everybody with me?
Brilliant idea, Coach. Brilliant idea.
Well, let's do this first. We got to do our background. So, when was the 50-year mortgage introduced? Because we want to get the dates right so we can give it to AI properly. Introduced in 2025. November 8th. So we're going to take this date and we're going to be able to put that date in so that we give because keep in mind, if we just put in the 50-year mortgage, they've been talking about 50-year mortgages in previous years, so we want to give it the pinpoint and we want to show it the narrative that these 3 products have been introduced in a very close proximity. So once again, when was the portable mortgage introduced in 2025? And this is no different than using your AI staff. We're giving each AI a different task. Give me some background on each one of these products. I knew one of the AI was going to do this. So when was the when did the portable mortgage go viral? Go viral in the media in 2025. See how I say Wednesday, November 12th, last week. And I want you guys to understand this, and you guys have seen me do it dozens of times. If the AI gives you an answer that you know is not correct, you got to give it more information. You got to reword your prompt. And you want to keep rewording the prompt until it gives you the answer that you know to be true. So this also teaches you something else, another teachable moment. That in the past, you might have put something into AI and you just accepted that that's the answer. Nope. You got to really dive deep and make sure the AI is giving you the correct answer. You may want to put the prompt in 2 or 3 different ways, because that first answer may not be correct. Because the AI is identical to your own brain. Because I told you, remember I said the human brain will always give you an answer. It was designed to always give an answer. The brain does not shut down. If you don't know anything and you ask yourself a question, your brain will give you an answer, no matter how wrong it is. And AI is the same thing. AI would rather give you incorrect error information than tell you it doesn't know. And we've all experienced this, right?
Yep. Well, based on someone's opinion.
AI will make up. I've seen AI make up an answer. And then I go back and tell it it's wrong. Oh, yeah, you're right. Let me give you the correct answer. So you got to be specific in how you ask the questions and the prompts that you use. So we got the second one, November 12th. So now let's ask the third one with the crypto. When was crypto-backed mortgages introduced? Let me get this out the way. In 2025. So once again, when did it go viral?
Morning.
Go viral in media in 2025. July 2025. June, July is when it was introduced. So we got our dates. We got our mortgage products. So when we get to the echoes, that's next. We're gonna let the echoes run, and then we're gonna put in these 3 products with the dates and see if we get an updated understanding of what the echoes is. So let's run the echoes.
I'm glad you're doing this, Coach, because I would have got it wrong again, man. Because that echoes is exactly right now what housing. These questions here are geared for housing, and I didn't see anything on prompt questions that we currently have that's going to be able to get that, because this is not a rock. We're just dealing with echoes, and I don't know where to pull that stuff from, man.
Yes. But that's it. You got to go find the echoes, and that's what these 3 work. They haven't been implemented yet. People are just talking about it, discussing it. So yeah, they're not echoes yet. I'm sorry.
Because the fact that guy is going to hype up crypto for housing, all it takes is that guy in office, Pulte, he's going to start talking, and then guess what? That whatever Mirren guy that's sitting over there part-timing in the Fed office, he's going to start talking. So there's going to be some causal sequence for echoes that we may need to start listening to, because we don't have real data at all, and we do not have infrastructure.
Yep.
And AI will not fix this.
And then keep this also in mind, right? So right now we're talking about the beginning of the supply chain of housing, which is the interest rates and the mortgage. But at some point, all of that financing is going to go into the construction. And we know that we have a labor problem with immigration, because they're the main ones that are building the houses. So even getting the houses built is gonna be some kind of a bottleneck.
Thank you. Look in these major markets, especially in a business market out there in Florida. Anytime you see one of those 3D model homes, or any type of robot, because they got robots now to do rebars, to tie up rebars. They're creating robots for there. They already got a couple of I forgot the community out here in Houston that they're doing with those 3D bots where they, spew out the concrete and just make it, So they're doing a neighborhood like that right now. That's going to impact these instruments that they're talking about. So yeah, please, you're creating the causal sequence for the echoes. Go ahead.
You got it. You got it. You got it. So let's run through it real quick. Like I said, we got plenty of time today. We are coming up on 8:20, so I do want to run. And you guys saw me what we did on Saturday. I think today's the day, right? We're coming into the new thing from November 15th. So I think we should be running our new prompt, right? So let me go ahead and bring up my my trading platform. I'm super excited to run this. Everything is a theory until you put it into practice.
Correlation echoes.
Mm-hmm. Has anybody heard of another way of building the homes where they're using bales of hay? I'm gonna show it to you. All right, I'm gonna show it to you in a minute. Remember we talked about all the different forms about, I think last month I walked you guys through about 4 different ways that they're finding ways quicker to build the houses. And I told you that they'll make the walls and the structure at a plant and then bring that and then just put it together. We talked about the small homes, like Home Depot has these ready-made homes that they can build. We talked about the Lego. They're using like some forms of a type of Lego to do.
Prefab. Prefab.
Yeah, but there was another one where they're using kind of like cork or something like that. But they have a new one with bales of hay. I'm going to show you that one today. And the weirdest part is that the bales of hay doesn't catch on fire.
Yeah, you got it. I like to see that.
So they must have treated it with something.
Well, no, because it's so dense. Because the bales of hay is so dense. And keep in mind, it's also going to have, plywood or different kinds of walling, so the inside of it is going to be the bales of hay. So obviously you're going to burn through the outer walls, but inside is literally, the way you're structuring everything is bales of hay, and it doesn't catch on fire. And it's they also say it's really thick insulation. So it answers all the questions, that it's fireproof, insulation. Obviously, it's natural, so it's cheaper to build. But I'll show it to you after we run the echoes. All right. So the market. Did you guys see last week the market fell underneath 47? It broke the 47,000 resistance.
Yeah, it's in the low 47s. It may go down to 46. I think you had mentioned 46 at our last.
It did break it. I saw it. I can't tell you when. Well, yeah, it broke. Yeah, this is the one where it fell. Came down to 47,105. But I thought I saw it break the 47. I don't really see it. I may have to go and look at a 1 day. Wow, this one is 38. But I'm telling you, it broke this 37 down here. It came into it. I just got to find it. Let me go into a 5 day. I guess a 1 week. So 37. This is showing me 35, but is this current? $24. I put in weekly. Oh, so each one of these is a week. So let's see if we can find it. So yeah, it came down to 35 actually. 35,572. Are you sure? When is this? The 24th of when? December. Yeah, that's December. That's last year. I put you see up here, I got weekly. Why is it giving me?
What happened to the numbers in the right? How did we go to
I'm gonna
41 to
I'm gonna go to TradingView, man. I'm telling you, I really don't like the charting in NinjaTrader. I put in a weekly and it's taking me back a whole year. Let's find it on TradingView. I could put in a 5-day. See right here? Remember I said it broke it? You said, see how quick I found that? And I couldn't find that on the NinjaTrader? That's crazy. All right, so there it is. It broke it, gave it about 46,965. So it did break it on Friday. And it broke it at the open. It bounced, but it did break the 47. So if you understand technical analysis, now granted, it didn't do it at the close, so it's not as strong. But I noticed that when it does break, keep in mind that 47,000 with all those zeros is a very strong level. And if it broke it, it's possible that the markets may crash underneath the 47 again. And maybe one of the announcements this week will cause it to happen. But we're going to keep our eye on it. I know that might be significant. And we'll see what the market does. Let's go over the stats, the metrics. So average 30-year mortgage is at 6.24. Daily lender surveys show the 30-year fixed hovering around 6.28. Okay. Fed rate is 4 to 4.25. That's not right. It's supposed to be 3.75. Come on now. Come on, AI. And that's what I'm saying, guys. You gotta be able to catch AI when they're giving you BS. They're telling you it's
Has
at
it been
4.
updated though?
Well, how can you update it? That's the Fed came out and told you that was there another Fed announcement? No. It's supposed to be 3.75 to 4. Don't worry. I'm gonna stay on it. And if I don't see the AI update that with the correct rate, and I'll tell you what I'll do is I will add it. I'll do the correction when we add in the 3 mortgage products, so that the AI does not continue to put in that 4 to 4.25. No sir, no sir. I still haven't found a way to get rid of this. Let me go back to my minute chart. That'll get rid of it. So yeah, there was no major movement at 8:30. It kind of actually went down. It's probably going to do a slow build. The market dropped a little bit at 8 o'clock. Let me get rid of these candlesticks. Market dropped around 8 o'clock from 47.2 to 47.1. So yeah, like an 80-point drop. We're going to come back and watch the slow build from 8:30, see what it does. And then maybe we can put a trade in it at 9 o'clock and 9:30.
Wouldn't it be
But
something
you
if
see
we're
the
at
trend
35 before the new year comes?
Say it again.
So wouldn't it be something if we drop down back to 35 before the year turns?
I know. Well, let's see what it does. It's not going to do it in a steep decline like that. But we have to see what happens with the last Fed report. That's what's going to let us know. If there is a decision to be made on what direction they want the markets, and where they want to position the range, it's going to be based on that December announcement. And Powell will be in charge and in control of that narrative going into 2026.
How much of an impact do you think Mexico's riots right now that they're having?
I didn't know about this.
Anybody seen that? Yeah, they're at the president's palace. They're doing some major riot in
Mexico?
Mexico City. Yeah, major in Mexico City.
Do we know why?
Well, because they had killed one of their mayors, I believe, one of their governors, one of their governors, I believe the mayor may have got the title wrong, but he was like, because it was during a time when presidents doing that demonstration where Trump was saying, hey, should we bring our troops in to help with the cartels, and it was during Halloween, and he had made a public announcement on news or media, in their local media about how he wanted help with their cities, and while he was out there celebrating, they the narcos sent some hitmen at him and they killed him. It was like a neighborhood city, whatever, in that little town event. They came and killed him live, and everybody's saw it.
Oh.
The town people got a hold of the killers, so now they're emboldened. They're not even afraid. And so, plus, you got to realize it's CIA stomping ground. So you got a lot of
yeah, we know
economic
that.
hitmen sitting out there. There's just sales just waiting. Well, they're
Yeah,
active now.
they say protesters attack police with stones, fireworks, sticks, and chains, grabbing police shields and other equipment. Mexico City. Let's keep our eye on. Yeah, well, I'm gonna look for it this weekend. I'm gonna look for it today, and then I'll post that also in WhatsApp if I can find a decent video. But yeah, we'll see how that impacts the markets as well. All right, so yeah, I'll update the rate. All right. The conclusion: the cost of capital remains a clear headwind for the housing market, although rates have somewhat stabilized. They remain at levels that constrain mobility, affordability, and new construction. Until financing costs ease meaningfully, CapEx and demand can remain muted. Employment, we already know how employment is. While I did not locate an up-to-date national figure for construction employment, the broader U.S. labor market remains relatively tight with wage pressures. The National Association of Home Builders noted that builder expectations improved in October, partly because mortgage rates have dipped and builders expect starting to pick up in 2026. Rising materials and labor import costs continue to be referenced as a constraint by builders. Final conclusion: employment and labor supply remain a moderate constraint on the housing market. Although demand is key, the ability to deliver new homes profitably is also being held back by, once again, labor costs, which we already knew. Sales, existing home sales, the latest figure for September, 4 million units, up 1.5 and about 4.1 year over year. Builder sentiment for October was 37, up from 32, but still clearly below the 50 level threshold. Inventory and days on market, according to Realtor.com for October, active listings rose 15% year over year, but homes spent averaged 63 days on market. Final analysis: sales momentum is modestly positive, but weak overall. The market is not robust. Volumes are low, inventory is rising, and buyer traffic remains thin. This suggests a cautious stance on the housing market's near-term momentum. Inventory. Housing starts, supply of new homes for August, 1.3 million units, down 8.5%. October saw active inventory up 15.3% year over year. Material costs and supply chain, builder reports price reductions and incentives. 38% of builders cut pricing. Final conclusion: inventory dynamics are mixed. New home supply is contracting, supportive. Resale inventory is expanding, cautionary. The net effect is a muted supply environment rather than a strong tailwind for pricing. None of this sounds good, guys. Demographics, final conclusion: Demographics remain positive, underlying force of housing. They provide a structural backdrop that mitigates downside risk, but they are not sufficient for themselves to generate strong cyclical growth. Final on economics. The economic environment is neutral to slightly weak for housing. Underlying jobs, income support demand, but affordability and rate pressures plus inflation are constraints. Housing is vulnerable to an economic shock. So I saw the word constraint on almost all of these. So and we knew this coming into this week, that the housing market is pretty much dead. But I'm hoping that when we factor in those mortgage products, that we might see somewhat of a surge. All right, putting together all five reside components. Here's a summary. The market is soft. It's in a soft phase rather than a full downturn. So when you see the word soft, it means that it's inclining, but less and less each month. Everybody understand what soft means? It's still increasing, but it's less and less each month. That's the difference between a soft phase and a downturn. A downturn and when it just goes the opposite direction and it's on a decline. All right. The latest builder sentiment remains low. This suggests new home supply likely remaining muted. Existing home sales show modest improvement, but still reflect a sector operating below robust norms. Neutral, mildly negative. On the positive side, the demographic backdrop remains supportive. I would assign a cautious hold on the trade. The sector is stabilizing, but not yet a broad up phase. Builder stocks probably underperform broader market until clearer signals of demand. Home buyer, home owner, those locked into lower rates can remain on the sidelines. New buyers face higher costs, and that is the key. Even with my landlord, if you have a really good pandemic rate, a lot of these people who got the 0%, 1%, 2% rates during the pandemic, none of them want to refi. Keep that in mind also. That's another reason why people do not want to sell their house or refi their house, because they got such a brilliant rate that they don't want to let it go.
Coach,
what?
That's kind of also the momentum they're using, or the argument they're using for that portable mortgage, to take that with you.
Yeah. Brilliant. All right, so we see by the acronym, everything is bearish. Everything is stalled out, constraints, soft market. So now let's go ahead and put the echoes in. Do I have the echoes? Nope. We'll get back to that. We'll pull the echoes out. No. All right. I knew it's somewhere to change. Yeah, here, right here. We want to put housing. And then we'll let this run. And then now I will prepare a prompt with those 3 dates. €50 mortgage. And I don't know if I want to give it the AI the narrative. I don't want to feed the AI a narrative. I want it to come to the narrative by itself. I was gonna put because of the failing housing market, and I don't want to do that. I'm gonna let them I'm gonna let the AI kind of figure it out. I'll put recently. Next. Portable mortgage. Went viral. In the media on, well, let's put starting. We'll put starting November 12th. And the last one, crypto-backed mortgage went viral. In the media. Around late June and early July. And I should probably put this in first so the dates are in order. So let's put that one in first. All right, I'm going to copy this out. I have it in my clipboard. I'll put that back in after we go over the echoes. All right, first off, economic events. Existing home sales showed a modest month-over-month rise in September. Both are still well below strong market readings. Because if it's below that 50, that's not good news. Trading decision, treat near-term strength as fragile. Calendar, a single better print means trend change. I don't know what that means. Housing indicators are released on different cadences and are seasonally noisy. Census housing starts monthly. Market reactions to single prints are often amplified by algos and retail chatter, but may reverse once the serial data confirms direction. Trading decision, avoid building a full position. Instead, set small conditional entries or options structures. Monitor housing permits. What is SLOO? Let me search that. Senior Loan Officer Opinion Survey. Never heard of that.
That is a big indicator they used to use back in the days when there was Countrywide.
Gotcha. All right. Released in the 2 to 6 week window after the index, the housing index comes out. Market microstructure and field reports show rising listings, longer days on market, and building cutting incentives. A sign many traders participants are cautious and some owners sitting on rather than transacting. Still nothing good. The hold sit out narrative is real. Like I said, it's basically telling us not to trade it. Hold sit out narrative is real. Favor liquidity and defensive positions. Cash short dated protection. Yeah, they're talking about puts and everything. We haven't really told them that we don't trade that yet, but yeah, no, nothing on that opportunity. Cherry pick a regional boom.
Cherry pick a regional boom?
I see what the AI is doing. The AI is using the echoes to give us advice on how to invest in homes, not invest in the stock market about the homes.
Got it. Got it.
As soon as I see regional boom and Sunbelt metros, it's trying to give us advice on how to invest in the housing market itself.
Seems like a contrarian approach from a generic response we're getting until you kind of drill it down into the actual trade itself or position.
Yeah, but I'll specify that when I put in this next prompt with the three products. All right, the sentiment, amplified, anecdotal, open house success story. See what I mean? It's giving you information on the actual housing market. So this echoes is not really giving us what we wanted. So let's fine tune it. Factor this data into the echoes analysis. Along with an interest rate, along with a Fed rate of 3.7. Remember I said they got that wrong? We're going to add that back in, 3.7% -4. Focus the analysis on trading. And keep in mind, guys, we have specified at the very beginning, remember the original prompt? We gave it the housing market. We told it that we're analyzing for the stock market. And you notice when I put the echoes in, when I didn't reintroduce, shouldn't the AI have kept us in that same focus? I mentioned all of the different, and I'll tell you what it did. I'll tell you where it deviated, because I put it right here, the housing metrics. But that still should not have deviated to giving us advice on how to trade the housing market. I told you in the very beginning that we're trading, all of these economic housing index. But this is what I mean about even in your prompts, you may want to keep adding the same economic events to keep the AI on track. Does everybody understand what I'm saying?
No, can you repeat that again?
All right, so let me show you the template. You see how the template has the dividers for each process?
Mm-hmm.
Inside of the beginning of the prompt, you may want to make sure to add back in your economic category and your scheduled events in each one. So you need to add it here. You need to add it here. You got to add it at the very beginning of every single prompt, because if you don't do it on every single one, it'll veer off right now of what it's doing to me.
Yeah, because go back up, Coach, up to the top. Yeah, you see where E is at? Those examples.
I replaced this with housing metrics.
Yeah, but can we even use HMI? Because every time I'm using HMI. I mean, when I started Saturday, when I was doing it Saturday, it was giving me reports from like Friday, which I didn't put, like from 3 different other AIs.
Yeah, we got to figure out, and that's once again goes back to what we're saying. We got to figure out what we're doing wrong and what we're feeding the AI. But I think putting in the scheduled event or the category will keep it on task. Because if you don't do that, if you don't specify, because I didn't specify it here, and it deviated and started showing me metrics on how to invest in the actual housing market. No, why did you deviate from all of this that I told you up here? So I want you guys to give you that as well, that as you're building your final, each one of these prompts, make sure you're including the economic event. Some of them already have the brackets, but some of them may not, but so include it. Find a way to include it somewhere in there where it won't deviate.
Coach,
we on the same?
Yeah. Do you suggest when you see those incorrections to pinpoint it and just stay with the conversation? Because that's what we're doing. We having a conversation with AI. Because I found that when I did, and it was really out of laziness, but it was actually it corrected itself. It said, okay, avoiding that particular date, and then it went on with its analysis. So do you suggest that when you see that when you go back to your prompt, or you use the same prompt like you suggest, that you highlight that, or you just stay with that? Rather, do you stay with the conversation when it makes that mistake, or do you just start it?
No, you find a way to fix it, because that's what I'm doing. That's what I'm doing right now. Is I'm inside of this new prompt that I'm building. I'm making sure to include all the things it got wrong. So it got the rate wrong. I'm making sure I include that. It was trying to analyze the housing market. I'm refocusing it back to the stock market. So if you see that the analysis does deviate in between, before you put in the next prompt or the next analysis, correct it. Put it back on the right path. And you can either do it separately, or when you put in the next prompt, include any changes, any corrections in the next prompt. Let me give you an example. So like right now, if I did not want to do this right now, my next prompt is trend. Right? I've done the acronym. I've done the echoes. So my next analysis is the trend. So I can put this in and then add the trend prompt to this. Does that make sense?
Say that again.
Okay, let me take you back. If we have all of these different analyses, and let's say right now, I just put in this echoes, and it got a lot of different things wrong. Right? It got a few things wrong, even in the acronym. So I can do a separate prompt to put it back on track, or I can add the corrections onto the next analysis.
You're just talking about that section of echoes, correct? I see what you're saying.
My next analysis is the trend. So I can literally take this trend prompt and add it to the corrections. See how I did that? I can put it all in one, but I don't want to do it because I want to make sure that it's showing me that it's going to correct it. So I'm going to hold off. I'm going to add these things in separately, see what the AI gives me, and then I'll do the trend. But I got everything. I got the 3 events. I got the I wanted to recalculate the echoes. I gave it the correct Fed rate, and I got it back on track where we're going to be analyzing the stock market. And I can even put in, like I told you, to put in the category. Focus the analysis on housing index for trading the stock market. See, I put it back on track. So now it's going to go through the echoes again with all of these modifications, and now it's going to give it to me based on the housing, the economic report. So let's run this real quick. I'm not going to run the positional. I guess we'll do that tomorrow. Let's look at the markets and see what happened at 9 o'clock. So we still see a major decline, guys. All this morning, nothing but a major decline. Major decline. Around 2 o'clock in the morning is when the markets went up. The markets capped at about 340. And after 340, the markets have been falling. There was another increase around 6, but that didn't last. The markets have been falling, falling, falling. The Epstein emails are doing their job. All right, so let's see. Let's incorporate the recent headline mortgage innovations into the ECHOS framework and tie them back to the housing market, and particularly the National Association of Home Builders Index, existing home sales, housing starts for trading implications in the housing sector. I will highlight which narratives are legitimate signals, which are noise or manipulation, and how they affect positioning. Love that. All right, so we just want to look at the end. All right. Crypto-backed mortgages, while interesting, these are still niche, higher risk loans with unclear scale. Therefore, this is more noise than a broad structural shift for the mass housing market, 50-year. This is a headline innovation, but significant legal and risk hurdles remain. According to UBS analysis, the benefit may be marginal. Portable mortgages, potentially more interesting because they address the lock-in effect, which is what we were talking about earlier, when people have these low interest rates from the pandemic. That could affect turnover, which in turn affects new build demand and existing home sales. So this could be a moderate signal. Trading takeover for event. The financing innovations may tilt demand slightly positive, but not enough to overcome the major headwinds: high rates, constrained starts, high inventory. For the housing index, treat these as potential catalysts, but not game-changing unless supported by real data. And it tells us what the real data is: getting the HMI above 50. So what it's telling us is, remember, this is the hack week. So we're going to look at the index today. We're seeing if the HMI is going to come above the 50. Then we can use that data to trade the housing starts on Wednesday and the existing home sales on Thursday. Does everybody understand that, or do I have to repeat it?
Sounds good, Coach. Real quickly, the HMI being at 50, how significant is that? Because that's the first I've ever heard of that.
So some of the economic indicators have this kind of benchmark area. Like they have this number that if it's above 20, below 20, above 0, below 0, above 50, below 50. That gauges whether it's bullish or bearish, or whether it's strong or weak, or whether it's hard or soft, or whether it's dovish or hawkish. So a lot of the metrics will have that benchmark point that teeters on what the metric is, if it's a strong or weak indicator. So for the HMI, it's 50. Above 50 is good, below 50 is not. Even if it's rising close to 50, it's still considered soft. It's still considered weak because it's under the 50. So let me give an example. Let's say it was at like 45, and it rose up to 49. Even though it rose up to the 49, because it's still under 50, it will still be a weak sentiment. Make sense?
Yeah, the momentum. Got it.
Yeah, there we go. All right, so calendar is telling, it's factoring in the mortgage announcements. Nothing major there. I don't see any implications on that. Conclusion for calendar: mark the next HMI and housing start print as key trigger windows. So it's once again telling us that whatever's happening this week are not going to be triggers. Mark the next one, because this one ain't it. All right, are traders assuming and holding exposure or staying on the sidelines? Press coverage of the 50-year mortgage and portable mortgages enthusiastic. New era of home ownership solved the affordable crisis. Some builder adjacent stocks may already reflect optimism, expectation of higher turnaround and demand. However, my sense from the fundamentals, many institutional investors are still cautious because the core drivers, rates, starts, and inventories remain challenged. There is a likely of a holding position. Traders are not just fully jumping into the trade. Some speculators may be overweight hope, but broad exposure remains muted, giving high rates. All right, so over optimism in housing stocks, niche lenders, fintechs, marketing crypto-backed mortgages may trade up on social media hype, but given limited scale, there could be a bubble there and reverse risk. Expectation. Many commentary pieces assume that innovation like a 50-year mortgage or portable mortgage will meaningfully boost home purchasing power and turnover, thus improving building sentiment and housing starts. Most probable outcome, the effect will be modest and gradual, not immediately and dramatic. Legal regulatory constraints for the 50-year mortgage, scale issues for the crypto-backed mortgages, and structural supply issues will blunt the impact. So the next HMI print will tick up a few points, but likely still remain below 50. So they even give you a prediction that even the next one's going to be low. So they're saying even for this announcement and the next one, the housing market is going to stay below 50. Set realistic trigger thresholds. If expectation gets ahead of data, that sets up a risk of disappointment. Many media stories treat the portable 50 announcement as almost silver bullet fixed for affordability. This is misleading. They do not address core supply shortages, interest rate environments, labor costs. Sentiment reading, the mood is optimistic, hopeful. I hate that word hopeful. Hopeful is kryptonite. Hopeful will get you killed. Market participants are attracted to new mortgage constructs and believe they could unlock latent demand. Given the rate funding headwinds, this is a latent caution underneath. Investors are not fully committed. Overall synthesis and trading view: neutral to mild bullish. I see nothing good. Housing starts remain weak. I see nothing positive, nothing bullish. Which we expected this, guys. Now, with this said, these announcements, these events are for Tuesday, Wednesday, and Thursday. So is everybody okay with doing the business class on Friday?
I am.
I know me and have been already talked about it, but
I've got a vested interest.
Yes, you do. So. Everybody, there is no economic event on Friday. Is everybody okay with us doing the business class on Friday? I'm gonna try to do it once a week. Try to pick a day that will work.
I've got no problem with
it. Okay. Anybody else? Those of you that I'm helping with the business, I'm looking for you to sound off. Is everybody sleeping?
Yes, sorry, I was trying to park.
I got you, my friend. Friday good for everybody?
Yes.
Hello. Are there only 3 people in the room? Got 7 people. Everybody's snoozing, boy, on a Monday. All right, so yeah, I'll just do that on Friday. We'll do the business class, and I'll work with more people. I'm going to be working with you this week. I'll contact you today because now that we got the name and the logo and it's time. We'll pick a day this week that me and you can get together. I think we said Wednesday, so we'll pick a time on Wednesday. And then just be prepared that we should have everything ready on Wednesday. So going into that Friday, I'm gonna get everybody kind of done, and then we'll at the very end of the Friday we'll do like a mock. Somebody made a suggestion on doing like a mock live where we ask you questions, medical questions. So we'll do that on Friday. All right, guys. There's nothing major. There's no point of staying to 9:30. The market is just down, down, down. We'll pick this up tomorrow. Everything in our analysis today showed nothing but bearish on the economic events this week.
Welcome to the housing world.
Got it, my friend. But
this
like
is
I said,
put everybody to sleep.
Yeah, exactly. But I'm hoping after that Fed announcement in December 6th, I think it was. I'm thinking after that, the government reopens. But I'll tell you something else. They're voting this week, and they got all. Here's the final thing on that. They have all the votes to open up the Epstein files, and they're going to be voting on that this week. So that may also impact the markets.
Wow.
How much do you think if Powell sees that he'd be like, you know what? I don't think we should lower the rates December.
I don't know, man. At this point, I'm pretty good at predicting things. I am so lost at what this is. So manipulated. That's why I told you guys this thing is so manipulated that I'm spinning. Don't know which direction to go. I do know the overall. Like we do know the overall. Looking at a year. Looking at the Mag 7. Looking at those kind of things. We know the direction is still up, but this whiplash, month to month, trying to navigate the institutional and administration manipulation. It's just vertigo.
I heard that guy who was the Big Short guy shut down his firm.
You talk about Lex or somebody else?
Oh, you mean the Burry?
Yeah, I forgot his name. I gotta look.
What's his name? I'll look it up real quick. What's his name?
Now that's a movie I did watch, The Big Short.
Yeah, I think that's the guy, the real guy who they call
Michael Burry. Michael Burry, I think is his name.
Yeah, I think that's his name.
Yeah, so he shut it down. Wow.
I don't know how to spell his last name.
I think it's like Bury, like
something like
that. Burry.
RRY. Okay.
Shuts down. Yep, shuts down is fun. Big Short investor Michael Burry shut down his fund. So now what?
Oh, that is very interesting. Huh.
But I got to tell you something, guys. Because I literally got started trading with Nasib Taleb being one of my mentors, reading all of his books, dissecting it like a Bible. So I never understood why Michael Burry would open up a fund or a firm, because he's basically a black swan trader like Nasib Taleb. So your model doesn't really work for regular trades. You are looking for the major events, that you're looking for the outliers. You're looking for the black swans. You're looking for the short, what they call them, the micro crashes. You're looking for these events that are not normal. So you don't open up a firm on that. You just look for it and trade it as they come. But I think he made so much money from the mortgage crash that he was being pushed. He's being incentivized by other investors to open up the fund. But I don't know why he ever opened it up.
I completely agree. I'm like, dude, what makes you think you're gonna ever be this lucky again?
Yeah, and I didn't want to use that word, but that's literally what it was.
Yeah, I mean, What made him think that there was going to really be another 2008
Thank
crisis,
you.
and he was going to just miraculously get it correct on
And-
every realm? And every time there was something, his name came up. You know,
Yep.
what would he do? What would he do? And I'm like, he hadn't won since the 08.
Thank you. And I'm telling you, the only reason why he did it was because he was stubborn. Because everybody was trying to get him to get out of that trade. He wouldn't listen. It was a shot in the dark.
But look at it like this: he had insiders giving him actual proof of
True.
real data.
True.
So he doesn't have he knows the data is no longer available to him anymore. It's just like,
Got it. Not on that
again,
level.
yeah, not on that level. He's not going to get people to call him on the phone and say, hey, this is that and the other. You know, because the data is skewed. He knows the market is flat. He can't depend on housing like housing used to be able to move the markets. They no longer do.
There you go. And I do want to qualify that because he didn't do insider trading, guys. If you watch the movie, he got the data on foots on the ground. They went out there and talked to the mortgage brokers and the real estate agents. So it wasn't insider trading. He got it directly from the source of the industry.
Exactly. And I talked to those. I got brokers. I got a broker right now who reminds me of one of those characters on the movies, but she's like, oh, she's older, around our age. And we have some fantastic conversations because now everyone's pivoting into commercial real estate because that's where, you know, the liquidity is easy obtainable without all of the manipulations. I mean, the fact that Fannie is saying what they're saying is they must be on crack again. I mean, because to even discuss a 50-year mortgage puts the whole fact that you did a qualified mortgage regulations and all of that time with Dodd-Frank to even discuss it, that's completely against the law that they wrote.
Now, I saw a video this morning, which is going to fit into what the reason that he gave. I saw a video this morning that talked about AI agents are now inside. Well, I don't want to say insider trading, but there are AI agents that are actually not replacing the algorithms, but let's say that the AI agents are the ones in charge of the algorithms. So think about that. AI agents are taken over as being the person behind the algorithm. You still got these super fast, you know, microsecond algorithms, but you got an AI agent that are finding opportunities in the markets to use the algorithms.
R2D2
so even the stock market,
C3PO. So they got a
there you go.
C3PO for wow.
And then now let's look at the reason he gave. He said Burry had previously warned that tech companies were using artificial intelligence to inflate earnings by understating depreciating expenses, which is exactly what NVIDIA and Palantir are doing. They're selling to each other internally, but the investors and algorithms are treating it as real metrics.
I'm surprised that guy's still breathing because he's the one that tried to short Palantir. And that dude still talks about him. He better find some cover real fast.
Well, that's good information to know. And then I also look at this, guys, because didn't somebody else liquidate their position of NVIDIA? We saw that last week, right? Who was it that liquidated their position? Oh, it was SoftBank. SoftBank liquidated their entire position of NVIDIA. So if you factor that in with what Michael Burry is doing, it may be a sign that they see the bubble, they see a crash, they see something in the works. They have insider information that we don't have. And maybe the government shutdown, maybe the economic events not playing you know, the way that it's supposed to, maybe all of this are indicators that the remember I say the cadence, the rhythm is not in sync, is it? So there may be so much manipulation happening inside the stock market where nothing has the rhythm and the cadence that we need to trade. You guys see it?
Been seeing it for the last 15 years just in housing. I didn't think it'd leak out like this in the whole industry. Where
And then I did tell you guys, if you look at the I did tell you guys at the beginning of this year that if you go by my system on using the Fibonacci to predict crashes, I did tell you that this is one of the whole number years. 2025 is one of the whole number years because the last crash was in 2020. This is 5 years later. So the whole numbers are a lot more have a lot more strength and power. I don't know if we're going to get a crash in the next month and a half, but it may happen in 2026. But I'm like I said, I see the movements that give me pause and give me caution, because that's what happens when you manipulate the market this much. The market will answer back.
there's no leverage. There's nothing for it to support. Used to have housing to support it.
There you go. But and then, like I say, even companies, if they're inflating the evaluations of tech, and like I said, there's no foundation, and it's gonna start leaking out of the markets. So it might be better for us to kind of take a back seat. But like I said, we're gonna kind of hold on to this. Go through our trading, go through our principles, go through our routine, stay on task, and then wait for that announcement in December. And I'm letting you know right now that if this thing goes belly up, we're going to turn the entire university into a business class. Does that make sense? If there's nothing to trade and we're going through a bear market,
yep,
it may be better to just do business. But we'll wait to see what happens at the Fed announcement in December. We're on the same page?
Yeah, I guess we just got to sit back and watch the climax of the House of Cards and the reality show that's going to play out from here to
there you go.
From here to now.
So we'll keep our ear to the ground. If you guys see any new articles, information, any new products, any new, what's happening in Venezuela, Colombia, anything at all that you think is going to affect the markets, the riots in Mexico, trade agreements, tariffs, China, US, anything of major importance, throw that into the WhatsApp, and then we'll discuss, and then we'll bring it back in tomorrow. So tomorrow is the HMI. Right now, it's not looking good, but we'll see how that plays out. We'll watch the markets, and then we'll see if we can use that maybe to give us an edge for Wednesday and Thursday. But outside of that, we're going to take Friday and use it as a business class to get everybody back on track with their businesses. I'm going to go over what you guys are sending me. If you guys have not sent me an update of your business model, and put everything in a Word document. I told you guys to do that. Put everything in a Word document, and then send everything to me. I'll review it, and then we'll be prepared. Please do not send it to me on Thursday. Send it to me now so I can look over everybody's assignment, and then I'll be able to advise you on Friday properly. Because I want to be able to run through it real quick so we can help Abena get up and running starting next week. So send me your assignments for your businesses, and I'll give you a recap. It's basically everything, and all of that should be in the fraternity. I think I'll put that in there where you have the PDFs and you have the matrix. So go through your matrix, fill out all the pieces, and then send it to me. I want to know who your partners are. I want to know your map. I want to know your partnerships. So put everything in a Word document. I want problem and solution. I want bridge. Go back over the matrix. Go back over the presentation. Put everything in a Word doc, send it to me. I'll go over. I'll make some notes on some things you need to change out or fix. I'll show you the highlights. I'll show you I'll give you a review over everything. What I would like you to do with the Word doc, use Google Docs. I know Damien used the OneNote. I have no problem if you use OneNote also, but there is a way to go into the settings on the online doc and share it where I can edit it. Is everybody with me? And I can show it to you. Let me show you how to edit so I can have a control over editing it. So we bring up, no, stop it. So you bring up a document. You go up here to the share. Everybody can see this? Boy, everybody's snoozing today. Are you in the room, guys?
I got you, coach.
All right, so up here on the share, you click on this, and then at restriction, you can hit anyone has a link, and then up here on the view, you hit edit. Does everybody see that? I can do it again. Let's do it one more time.
One more time.
You go to share, you go to restrict, anyone with the link, change viewer to editor, and then you copy the link and then send it to me on WhatsApp. Everybody with me?
Yeah, this is after we create our Google Docs. We go here.
Yeah, when you create the Google Doc for your business, you know, put everything in that Google Doc, and then share the link, but make sure I'm an editor, because I'm gonna go to the bottom of the doc, and I'm gonna make notes at the bottom of the doc. Or I'll give you something else that I can also do. Is right here on the side. See right here on the side, I can do add comments. So if there's something in it, I can also add a comment onto the side as well. Everybody see this?
Yep.
So I'll either add a comment at the particular point, or I'll just scroll down to the bottom of the document and make my notations there on things that you guys can change and make better. But make sure you share the document and then also make me the editor, and then send me the link.